Hello everyone, welcome back to Lab for Crypto. Today we'll have a discussion about one of the most simple graphs in the crypto market, but also one of the most important ones. And the name of the graph is the price drawdown from all-time high. And the reason that this graph is very important is twofold. First, it helps us understand why it is important to have tools to help us manage our risk every day in the crypto market because it's very, very volatile and you can lose 99% of your portfolio worth if you do not do that. But also help us understand how the crypto market matures over time. And I will explain what that means in a bit because I think it's better to visualize it and show it to you, but than just saying you what I mean about this. So let's dive to the graph and we will explain these two reasons in more detail. To explain the importance of this graph, I'm going to use Bitcoin as an example and also some altcoins, but of course in the platform you will be able to explore more than 20 crypto assets. On the y-axis of the graph in front of us, we have the date. On the y-axis on the left side, we have the price in USA in dollars, and also the price is in a logarithmic scale. And on the right side, on the y-axis, we have the drawdown from all-time high in percentage terms. And if we mouse over on the graph, you will see the blue color is the price of Bitcoin, and the red color is the drawdown from all-time high in percentage terms. And let's explore the peaks and the bottoms of Bitcoin through the years to understand how important this graph is. If we go and check in 2011, June 8th, Bitcoin reached its all-time high at the time, and the price was $29.03. And then if we zoom, a couple of months later, the price of Bitcoin dropped to $2.1, and in percentage terms, it dropped 92.75%. Therefore, if someone bought it, let's say on the peak, assuming that it will continue to go up, he or she lost 92.7, what was the value of its portfolio worth related to Bitcoin. And that is why it's really important to monitor your risk in a volatile sector like Bitcoin. Because now you're thinking, okay, but that one happened in 2011. No, that is continue to happening until today. And if we mouse over on the double peak of Bitcoin in 2013, again, Bitcoin had its all-time high in December 2013, and it went to 1.1k, and then it dropped to, let's mouse over again, it dropped to $175, and it had a roughly 85% drop. Then again in 2017 it went to 19.25k. Let's zoom also the top and the bottom. So the top was in 17th of December 2017, more exact. Yeah, so it was on the 16th of December 2017 at 19.6k, and then it dropped all the way down to 3.125k. So again, it dropped 84%. And the same thing was observed in the latest cycle. If we mouse over, you will see on the double peak of November 11th, 2021, Bitcoin went to 87.5k on the 8th of November 2021 to be exact again, and it dropped to 15.7k November 9th, and it was a 76.6% drawdown from all-time high. My point here is the crypto market and Bitcoin is volatile. And the first aspect of that is if you do not manage your risk and be able to understand when the top is approaching and you don't take some precautions, you can have these 85-90% drawdowns from all-time high. And therefore, if you are not prepared to hold it for a long period of time, you'll be most likely sell in a loss, which that is not good. Therefore, you need tools, and whatever tools that you feel that are useful for you, to help you understand when these times are in, and therefore you need to start to scale down when we are approaching a top, and therefore be prepared to either accumulate more Bitcoin when, for example, you exit the market when Bitcoin is approaching its all-time high and then re-enter again at a low price. But also, if you are just came from the gains, to be able to exit and do not see your portfolio going 90% in average, let's say, down. The same behavior is observed and even worse in altcoins. If we go and check Cardano, for example, from the first all-time high that it had in 2018, it dropped 97% down. Then it had it peak in 2021 alongside Bitcoin, and it went to $2.9. And in the bottom of 2023, we see that it was 91% down from its all-time high. Therefore, if you accumulated Cardano in August 2021 through November, September, expecting that it will go to $6 or $8, what was the expectation at the time, if you didn't know that that was starting to be the peak of Cardano, you will now likely sitting in a 90% loss. And if we even check the today's value, you are sitting at 79.3% loss. And this graph is telling us two things. On Bitcoin, it told us that Bitcoin is starting to mature, and as we don't see these huge gains that we saw in the beginning of on the genesis, let's say, of Bitcoin, as we don't have these gains, also we don't have these huge drawdowns from all-time high, from 90 to 93% that it was in 2011. In 2022, when was the bottom of Bitcoin, it went 75% down from its all-time high. And the point here is that Bitcoin matures and you expect to have a better performance than other altcoins, but of course not the same as other risky assets. And I'm speaking about drawdowns, not as a value in the long term. And in short, these are the 2 points. That first, it's important to monitor your risk because, for example, if you knew that Bitcoin top was in February 2021, where the risk, for example, in the platform was 99.86, and you exit the market at 57.5, and then accumulated back when the risk dropped to 44%, when the price was 29.783, this was a 50% drawdown. If we also check it from the graph here, it was 53.08%. And as a result, even if you don't want to exit Bitcoin and you want to hold it for a long period of times, you can adjust your risk tolerance and exit with some percentage of your portfolio, with not all of it if you want, and be able to accumulate even more Bitcoin. Because, for example, for simplicity reasons, if you exited with one Bitcoin when the risk was 100%, 99.8, what was the value, was even 100% on the 22nd of February 2021. And then it dropped 50%. So what that means, basically, you doubled if you exited with 1 BTC, and if you accumulated back in July, the 20th of July 2021, you got 2 BTC back. And that's the idea. When you have all these tools to be able to help you understand in which stage we are, you can even have, as even if you don't want and you want to hodl your crypto, you can do that for sure, but you can use tools, at least even a percentage of your portfolio, use it to try to exit or enter based on quantitative tools that we have also in the platform, but you can find it, of course, in general in other platforms as well. But the risk, for example, that you see in front of you is something that is unique and you cannot find it anywhere else, because we are the first company that I'm aware of that has a combination of on-chain and off-chain data to give this single risk value that help you understand where you are now and how you can adjust your portfolio based on risk. For example, we even got the second peak of Bitcoin in 2021 with a risk of 79%, when most of the models were signaling that Bitcoin will go to 100K at the time. And also we even managed to got the peak Bitcoin had at 73K, and also when it dropped to a value of 64, 66, let's zoom to be more exact. And also when Bitcoin was dropping at values of 67, 66, we saw that the Bitcoin risk was dropping, and someone will, if his or she risk tolerance was at 50%, will be able to accumulate and also get the price increase of Bitcoin that currently I think is at 71K. If we also now move to the altcoin season, I wanted to show you something. If you are not going to accumulate Bitcoin, which is one of the, I think, the most important and one of the safest assets in general, and you're planning to only enter the market in the bull run, you need to be aware of that most of the altcoins that you are going to accumulate are not going to exist even in the next bull cycle. And if you're planning to hold them, they can have a 99% drop. As I show you, I show you with whatever, let's pick one. Let's pick Avalanche. AVAX had its all-time high in November 2021, and it dropped 94%, and it lost 94% of its value. And now it's climbing, but of course, no one knows if it will ever reach again its previous all-time high, although I believe it will. But if we want to be realistic, no one knows. And therefore, that is why you need to monitor your risk and accumulate in low-risk areas and exit in high-risk areas. And this historical snapshot from CoinMarketCap tell us in 2017, if we go and check the top 20, top 30 coins, you will see coins that now don't even exist. For example, in the top 8 was Dash, was NEM, EOS, NEO, and that all basically, if you go in the CoinMarketCap now, you will not find these coins in the top 50 or top 100. And that means the chance of these coins revisiting their all-time high is really, really low. And therefore, people that accumulated these altcoins and just hold it for the next bull cycle probably lost already their money. If we go and check, I wanted to check with you the Google Trends. And if we see currently Bitcoin from the scale of 0 to 100, which is the interest over time for Bitcoin, we are now sitting at 29, which is basically the same as we had through the bear market. Therefore, the euphoria didn't came from Bitcoin yet and crypto. And that is also observed, if we go and check, for example, Cardano, you will see that is 80% down from its all-time high. And when we have these mania phases, you will see, if we go to the altcoin index, when the altcoin index is above 75 is where altcoins are starting to outperform Bitcoin, and you see this mania phase when altcoins starting to surpass their all-time high if they are good projects, or new coins popping up and try to get some of the market share. Therefore, currently we are at values of 59, so we are not in altcoin season, we are not above 75, and that is observed also in Google Trends, where the retail investors have not joined the market yet. Also, if you go and check the word crypto, again, we're at 32, which we are at values we saw in a bear market. And therefore, you need to prepare and be able to accumulate and exit when the time comes as we approach because I think we are in the start of a bull run, and therefore now it's a very important time from you to start accumulating assets that you believe are good projects, their risk is low, and prepare as we enter the bull cycle and you see these 10, 20, 30, 50x gains that people are hearing for the crypto market. But the other side of the coin is that, okay, you'll be able to see these gains, but you need to know when is a good time to exit, because if you just wait and think that this thing it will continue to go up forever, you will be surprised when you see, I'm just picking a random coin here, you can see this 95, 96% drawdown from all-time high. So imagine that you manage to get 100K from your when you enter the crypto market. You could lose 95% of it, so you'll be left with just 5K if you do not manage your risk and understand the market dynamics, how Bitcoin starts the bull market, how you need to have a stash in Bitcoin. Then when the market structure starts to show that people are starting to deleverage from Bitcoin and move their leverage to altcoins, be prepared to see this volatility and be able to monitor your risk every day. And that was the reason that I created basically this risk model, which was really helpful for me in the previous bull market and helped me protect myself when everybody was aiming for 100K in Bitcoin in the previous bull run. I was able to exit the market on time and prepare for the next bull cycle and accumulate when the risk was low, and accumulate Bitcoin was when it was 15K and 16K. And that the good thing for that is documented also in our channel. When if you go also check our Twitter and Instagram, on the day that Bitcoin reached its bottom, I actually publish the bottom range model, which I showed that actually Bitcoin was bouncing on the bottom regression line, and that for me was a signal to enter the market. And that is why it's important to have a platform like ours to be able to not go blindly to the battle and be able to have an advantage compared to other investors, which they just enter the market blindly because they think that it's going to go up forever. But I can tell you from experience that is not, and therefore you need to prepare yourself and be able to be smarter and trade smarter than them. I hope I explained the importance of the model, and also hopefully make you understand that the crypto market is volatile, but as it matures, especially for Bitcoin, I expect to have lower drawdowns from the all-time high. So imagine on this one we had a 75% drawdown. So in the next bottom, I expect to be around 70 and so on. But of course, time will tell. But definitely, I will expect something that is lower than 75%. And for the altcoins that are new, no one knows because they are so new, and therefore you will not be able to know how low they can go from their all-time high. As I said, if you like the video, please give it a thumbs up, leave a comment, as that helps the channel be visible by more people. And until next time, bye-bye.